Anthony Grasso here, bringing you financial news that you can use. In this particular video, I'm going to do a stock analysis on Block. Is this beaten down fintech company worth investing in right now? Well, let's find out together. I'm going to go over a summary of the company, its product offerings, recent headline news, financials, analyst projections, and I'm going to give it my buy, hold, or sell recommendation for both your short-term and long-term growth investors out there. As always, folks, don't forget to smash that like button down below. Definitely helps. And consider subscribing. Hit that notification bell to like your daily stock reviews and recommendations from an unbiased source. So let's get right into it. So as always, this video is brought to you by Webull, which is an online brokerage trading platform where you can buy stocks, options, ETFs, and cryptocurrencies. Now, if you sign up today and deposit any amount, you can get up to 12 free stocks by using my referral link in the description down below. So Block creates tools that enable businesses, sellers, and individuals to participate in the economy. Its segments include Square and the Cash App. Now, the Square segment includes managed payment services, software solutions, hardware and financial services, products offered to sellers. Now, the Square segment also offers GoParrot, which is a digital ordering and marketing platform for restaurants. Now, the Cash App segment includes the financial tools available to individuals within the mobile Cash App, including peer-to-peer payments, Bitcoin, and stock investments. Now, the Cash App segment also includes the Cash Card, which is linked to customer stored balances with customers that can use to pay for purchases or withdraw funds from an ATM. Its Square ecosystem consists of more than 30 software, hardware, and financial services products. Now, with the Cash App, it is building an ecosystem of financial products and services that helps individuals manage their money by making it relatable, instantly available, and universally accessible. Now, let's go ahead and look at some of the news of the company right now. So, a few weeks back, the company posted its second quarter results. Now, Block saw its growth decelerate a bit in the second quarter, but it remained strong in an absolute sense. Now, the Square businesses saw revenue grow about 24% year over year, excluding the addition of Afterpay. Now, the reported results for the Cash App were negatively affected by year over year fall off in Bitcoin revenue and a difficult comparison. Now, however, Bitcoin revenue is essentially a pass-through item in my view. Excluding Bitcoin and Afterpay, revenue increased about 21% year over year, which is modestly lower than the last quarter. However, management expressed confidence that growth will improve in the back half of this year. All right, so that's decent. So in other news of the company, now this is kind of interesting. So the Consumer Financial Protection Bureau, or the CFPB, asked a federal judge recently to force Block to fully comply with a pair of investigative demands that it's related to its Cash App payments tool. Now, the investigation is looking into Cash App's handling of complaints and disputes. Now, the San Francisco-based company disclosed the investigation in a March 2022 securities filing. Now, the Bureau cannot sit back while the investigation is stymied by the Block's slow walking, the CFPB's petition said. Now, Block has yet to provide any firm dates by which it will produce the relevant documents and data, instead saying that it would endeavor or hope to provide responses to requests, the CFPB said. In one instance, Block failed to propose production dates for the documents, instead saying they were to be determined, or TBD, the CFPB's petition said. So basically, it looks like this guy needs a good chief compliance officer to work directly with the CFPB to get their investigation going and to go away. I used to be that guy, but not for this company. My last corporate position was head of compliance for a fintech startup. Now, that story's for another day, but let's go ahead and look at the fundamentals of this company right now, because that's why we're all here for. All right, so the stock is currently trading at $72.36 a share, down 2.7% today alone. It has a market capitalization of roughly 43 point something billion dollars. Now, the company is projected to have about $17.5 billion of revenue for 2022, with negative earnings of a whopping $689 million. Now, the revenues are projected to significantly increase over the next few years to around $24.87 billion by the end of 2024, with a positive earnings of $91 million in 2 years. So basically, the revenue is forecasted to grow about 15.6% per year. Now, while Square is unprofitable, it has reduced its losses over the past 5 years at a rate of 27.5% per year, and the earnings are forecasted to grow a whopping 64.47% per year. So let's look at some of the key measures of the company and do some analysis work. So the most appropriate valuation measure for Square is the price to sales ratio, of course. The price to book ratio is excluded because it most likely underestimates the company's book value by overlooking hidden assets such as intellectual property. While the price to earnings and the price to earnings growth ratios are not meaningful because they have negative earnings. Therefore, Square seems like a good value right now, with the price to sales ratio roughly today about 2.7 times, and that's above the IT services industry median price to sales ratio of 3 times. Now, when we look at the price to sales ratio versus its fair value, and when you think of fair value, think of it looking at the future cash flows. For this estimate, we're going to use a discounted cash flow model. And I base that Square is trading below my estimate of fair value, which I put at around $206. Now, looking at the profitability of the company, now all through profitable on a gross margin basis, Square's inline profitability in the IT services industry sector, its operating and net margins are in line with the industry medians. Square is expected to become profitable over the next 3 years. Now, like most of its peers, they do not pay dividends. And looking at the growth of the company, well, recently the earnings trend at Square has been weak. Over the past 12 months, the company has lost 90 cents per share compared to the prior period's profitability results. Additionally, the average company in the IT services industry was able to post improved results. Now, they do have high growth earnings, though, because Square is expected to become profitable over the next 3 years. And like I said, the earnings are forecasted to grow 64% per year. Now, finally, looking at the financial strength of this company, while it has a debt to total capital ratio roughly 28.6%, which is in line with the industry's norm. Now, its interest coverage ratio is only 0.19 times, which means it does not have earn enough from day-to-day operations to service its debt. However, though, the quick ratio shows that the balance sheet can make up for the shortfall as there are enough liquid assets to satisfy current obligations. It has more cash than total debt, basically, and the debt to equity ratio is reduced from 49% to 28.6% over the past 5 years. And the short-term assets are of $12.5 billion. It exceeds both its short-term liabilities of $7 billion and its long-term liabilities of $5 billion. But it is important to note, though, insiders have only sold shares in the past 3 months. They're running for the hill. It's also important to note that shareholders have been significantly diluted over the past year, with total shares outstanding growing by 28.4%, which doesn't help the actual stock price of the company when you just dilute your current shareholders. So what do the current analysts say regarding this company? Well, let's figure that out. Well, the current consensus now is a buy and strong buy, with a 47% saying buy and 25% saying strong buy. The average price target of this company is around $117 per share, with a high estimate of $310 and a low estimate of $75. I'll sum it up by saying I believe this company is undervalued with possibly reasonable growth potential. So do I fall in line with this price target? Maybe, but I'm gonna go into that in a little bit. Now, going over a few of the analyst reports specifically. So let me bring it up here. I found a couple reports, and the first one I'm going to bring up is the Street Quant Ratings report. Now, they recommend a sell recommendation on this company. It's driven by multiple of weaknesses, which they believe should have a greater impact than any of the strengths, and could make it more difficult for investors to achieve positive results compared to most of the company's stocks they cover. Now, they say the company's weaknesses can be seen in multiple of areas, such as deteriorating net income, disappointing return on equity, weak operating cash flow, poor profit margins, and generally disappointing historical performance in the stock itself. And the Ford Equity Research report over here, they have a kind of a sell recommendation as well. Now, as a result of their systematic analysis of the 3 basic characteristics that they look at. They look at earnings strength, relative valuation, and recent stock price movement. Now, the company has produced a positive trend in earnings per share over the past 5 quarters. However, while recent estimates of the company have been lowered by analysts, Square has posted better than expected results. Based on operating earnings yield, the company is overvalued when compared to all of the companies that they cover. Share price changes over the past year indicates that Square will perform very poorly in the near term. And the CFRA report has a hold recommendation on Block. Now, they regard Square as an industry disruptor with a two-sided ecosystem, well positioned to drive incremental user engagement, but remain cautiously optimistic in the current market backdrop, given the sharp focus on profitable growth. Now, recently conveyed plans to throttle back spending to provide guardrails around operating losses and encouraging. But to be more constructive, Afterpay needs to live up to expectations, discover adjacent growth opportunities in e-commerce, and influence positive estimate revisions to warrant its current earnings and multiple even after recent compression. So let me bring it back over here. So based on all that information, am I a buy, hold, or sell recommendation on Block? Well, here are my thoughts. Most people should be aware of Block because the white countertop credit card readers used by so many small businesses, as well as the little square card readers that are inserted into the smartphone. Now, I look at Square as a material share gainer across its businesses that it is showing a status as a global leader, as a challenger bank / wallet, as well as a differentiated omni-channel provider for merchants. Now, Block is building an ecosystem of dozens of fintech-related services. Now, it's building a financial ecosystem that the widely used Cash App service focuses on helping people spend, send, store, and invest money. It also owns the global music and entertainment platform Tidal, among other things. Last year, it bought Afterpay, which was an Australian buy now, pay later service, further broadening its offerings. Now, shares of software companies are trading lower last week amid the rise in treasury yields, which has caused a sell-off in growth stocks. Stocks are pulling back following the strength earlier in last week. Now, yet the company's shares are down significantly this year and even today, and shareholders are jumpy over the direction of the company. This is partly because of the investor worries about a recession. This is true and will slow down Block's progress in the near term, but it definitely will not kill this company. Investors also question whether or not that they overpaid for Afterpay, the buy now, pay now service. The company continually reports strong growth, though, in gross profits. Now, I think most of these concerns are unwarranted, though. In the past, the concern was profitability, and then the company is finally turning around. It's definitely going to hit the profitability mark in the next 3 years, 2 years. Investors have to focus on how it deploys its investments and how the company is scaling back on the current expenses, which should please investors to ease some of these concerns. In the company's last quarter 10K report, it noted our Square ecosystem consists of more than 30 distinct software, hardware, and financial services products. We monetize these products through a combination of transaction, subscription, and service fees. The company's plans to cut investments by $250 million in response to uncertainty about the economy. We all saw the acceleration of the growth of Square's Cash App amidst the COVID-19 pandemic was definitely a game changer for the company. Now, Square's seller ecosystem continues to generate a healthy growth in the United States. And when I look at the company's prospects for international growth, it's extremely promising, to say the least. All through Block faces competition from PayPal, Discover, Visa, MasterCard, as well as other mobile payment services. It has a strong brand and a record of innovation. So based on all of that information, I am a buy on Square, and I put a 12-month price target of a whopping $135 a share. I believe it's undervalued with reasonable growth potential in the coming up years. I believe this stock will skyrocket when all the macroeconomic forces turn around in the future. But how long is that going to be? Nobody knows. Some people might want to wait out it and say, I'm not even going to buy into any growth stocks like this until I hear good news of the economy's coming back around. But at that point, when you hear the good news, it's already skyrocketed. So think about that. We think the longer term growth opportunities for this business remain considerable. Now, risks to this my recommendation and target price right now definitely are, competitive threats from larger payment companies, neobanks, which are the fintech firms that offer apps, software, and other technologies to streamline mobile and online banking, and execution difficulties associated with the rapid expansion into new verticals, let's say the Bitcoin and buy now, pay later divisions that likely drive more of the volatility in the financial resorts on a quarter-to-quarter basis. It must also respond quickly to changing consumer preferences, including the increasing demand for mobile payment services. But there you have it, folks. And as always, don't forget to smash that like button down below. Definitely helps. And consider subscribing. Hit that notification bell for your daily stock reviews and recommendations from an unbiased source. Until the next stock update video later today, folks. Ciao.